Hi, this is Drew Tignanelli. This is our February update, and the market is trying to hit all-time highs.
It is, Drew. And I know we're going to be talking serious stuff today, and so I promise not to kid around, but I did just want to say at the beginning that this is the Super Bowl edition of the Financial Consulate update.
Yes, I'm very excited, Tim. And I'm glad that the Ravens won. I'm sure there's a lot of our clients that are glad the Ravens won because we have a lot of Baltimore clients, but I'm sure there are a lot of clients that don't care that the Ravens won.
A couple, and we'll be respectful of them and move directly on to financial matters because there is a lot of news. The market hitting the 14,000 mark, what does that mean?
Well, you know...
And what doesn't it mean?
The key to the issue is that we have to determine, is this really a breakout into all-time highs where the market will never look back again on the previous high? So if you go back in history and you look, after the Great Depression, the market hit 300 in 1929. And then it took until, I think, somewhere around 1950-something to break
54,
that.
I believe.
54 to break 300 and never look back again.
Right.
Never, ever look back again. It hit 1,000 in 1966. This is the Dow Jones Industrial Average we're referring to. And then it broke down below 1,000 numerous times. It went a little higher in 1978. I think it hit 1,100, but then it broke down again, and it wasn't until 1982 where it came off of an August low of 780, I believe, and it shot up and went through 1,000 within a short period of time, and never looked back again. Never, ever, ever returned to 1,000 again. Now that's what's known as a bull market when it never returns to its previous high, previous high. And it's a bear market when it keeps breaking up and down and up and down. So in this market, we went to 11,300 and 2,000. We broke that in 2007. We broke it to 14,100. But then we collapsed back down to 6,600. Now it looks like we're headed to over 14,100. We're going to make a new high. That's what it looks like. That's what it feels like. The problem is are we due for another downturn someday? That's going to bring it down below that 14,100 again, that you couldn't call this a breakout.
So is it a new bottom, or is it up top that still is going to plague us?
And I think it's just a secular bear market that's not going to end anytime real soon. I think maybe we have 3, 4, 5 years left at the most. Hopefully, certain stars have to align for that. But I don't think we're there yet, because if you look at what the government and the central banks of the world have thrown at this economy to try to get it to just do what it's doing now, which is subpar, and everyone will agree it's subpar. Yeah, we see recovery in housing. Yeah, we're seeing some recovery in employment. Yeah, but nobody's saying that it's great in any way, shape, or form.
Especially considering the stimulus that has added to the momentum.
Yeah, I mean, think about it. The Central Bank of the United States has put in over $2.3 trillion into the system. The Central Bank of Japan is now pumping in almost $1 trillion into their system. The European Central Bank has put in almost $2 trillion. The Swiss Central Bank, which is unheard of for them, to pump money into the system. The British Central Bank, the amount of money and the amount of borrowing that governments have done to stimulate the economy is probably tenfold of anything that's ever happened in the past. And yet this is what we're getting. And so that's what leaves me extremely concerned.
So how have we responded in terms of those concerns?
You know, you have to take advantage of these up moves, but I'm afraid to put our clients at too much of a risk to it, because, you know, like somebody once taught me, and I learned it through experience, and then somebody told me that this is a principle that you have to learn, is that you may know what might happen in the future, but you're never going to know when it's going to happen. Or you may know when something's going to happen, but you're not going to really know what it's going to be. Which is kind of weird, you know. How can you know something's going to happen sometime, but not know what it is? You know, it was like 2007. I kept saying to the team that this market is going to go down, And I said it's more than likely in fall of 2008, but I had no idea that it was going to be to the magnitude that it was.
Right.
You know, I just felt that it would be a good, solid correction. I'm pretty confident that we have one more big blow up to occur. It's just a matter of time of when it's going to occur. And I would expect it to be before, you know, the end of this decade. And within the next 3 years is the most likely scenario.
So in the meantime, we have added to our stock positions to some degree to take advantage.
We did it. We've done it in a very conservative way.
Okay.
You know, we're looking for mutual funds or ideas that we feel are undervalued, or that the manager has a risk management technique that even if we're wrong and like 3 months from now the market takes this monster dive and we don't see it coming, these investments historically would not go down in a major way. You know, that's what we're trying to do. That's the best we can do. You know, a lot of people want us to be more aggressive, but I got that all in the 90s too. You know, oh, you got to be in the techs. If you're not, I'm getting out of here. And I'm like, you know, I just can't do it. The logic isn't there. The risk reward isn't there. That was finally proven to be correct in 2000, 2001, and 2002. Right now, I just can't get excessively invested.
Yeah.
And I know the numbers look good and all the things, but you know, it's when the market is collapsing in 2008, 2009 that you should be going gung-ho, being bullish. And it's at times like this that you have to start putting your caution flags up.
Yeah. What did Buffett say? Be fearful when others are greedy?
Yeah, you know, and his number one rule is don't lose money, and rule number 2 is don't lose money.
Yeah.
And rule number 3 is don't forget rule number 1 and 2.
Yeah.
You know, so that's what we're going to try to do. We're going to be cautious. We're not going to try to hit a home run. We're just going to try to hit some singles out, and when we feel the coast is really clear, we'll do it. Europe still has problems. The Middle East is still a problem. The U.S. is still unwilling to deal with its deficit.
Right.
And that's why we feel that Asia is still the best place. They've got their problems, but they don't have deficit problems. They don't have currency problems. They don't have spending problems. They dealt with those all 10 years ago. So that's I like Asia. I like the United States to some degree, but I'm not going gung-ho with it.
We're going to err on the side of conservatism, not aggression.
Now, also, we did an interview of a book author. It's called Secret Weapon. And his whole premise was that economic terrorism is something that every investor has to be cautious of. His name's Kevin Freeman. And I think it was one of the best interviews I've ever done in 20 years. And I've interviewed John Templeton, Sir John Templeton. I've interviewed John Marie Eviard, Jim Rogers. I've interviewed some...
Tim Maurer. Yeah, remember that one?
Well, I've interviewed some pretty top people, and but his interview was probably one of the most stimulating and one that every investor should know.
Excellent.
All of our clients should listen to. It'll be a link on the end of this video on the email that we send out with this video that they can listen to. And also, we're having an estate and income tax seminar later this month to talk about the new tax act. What do they call it? ATRA or something like that. They always have these goofy little acronym names for them. The American Taxpayer Relief Act. Now, only some taxpayers feel they got relief, but not everybody got relief from that tax act. But there are a lot of key issues starting in 2013. There's this Medicare tax that everybody has to be wary of. This new estate tax that's now been made permanent.
Right.
And what day is that going to be? Do you know? February 27th?
It's a Thursday.
February 20. Yeah, it is a Thursday.
You know what Ben's going to do? He's going to put this nice little thing at the bottom of the video right here and say, Tim and Drew might not know the date, but here it is.
Here it is. And they can just click there and send an email to Deanna and sign up for that seminar. And it's going to be, we've changed the location to the Embassy Suites right down the street because the response has been, you know, we were only going to take like 20 people, but the response is well above that now.
Okay.
And so we can take a good 50, 60 or more to come, and the Embassy Suites said they could actually support a lot more.
Great.
I think it's going to be information that everyone needs to know. Even though we know it, it's always good that our clients have a basis of understanding of why we're doing what we're doing and what are the rules that we're concerned about.
Absolutely.
Anyway, do you have any other smart things to say?
No, I just hope you
You
notice.
want to congratulate the Ravens again?
Well,
I see
I
you
hope
got
you
your
noticed my
Ravens
tie.
bow tie
It's
on.
not an accident.
Yes. Anyway, this is Drew Tignanelli saying God bless.